Because of the nature of each candlestick signal, it becomes much easier to analyze what's happening in the overall market trends. For example, we can see there's a support level right here, and there's kind of a trend channel moving sideways with lower tops. Right now, it looks like it's trying to base, but every time they open it up, they sell it off. And the one important factor is they haven't been able to get up above the T-line just yet. Doesn't mean that they're not buying, or I'm sorry, that they're selling. They're just not buying. So when we see stochastics kind of flattening out, and they're supporting at this level, but they're not going anywhere above the T-line, it's a good indication that there's really not any decisive move in this market. At best, we're still moving in a sideways manner. Now, more confirmation, obviously, of coming back up eventually to the top of the trend channel is if they can get up through the T-line area. That same analysis can be visually applied to the Nasdaq, where it's got kind of a base in here, kind of a top, and they still can't get quite up above the T-line. Notice yesterday they came back down and closed it below the T-line. Today they opened positive and came back below the T-line. Doesn't necessarily mean we're selling off. However, we've got a much more visual clarity that if they did come back down through this level, now we can assume we've got a wave 1, wave 2, wave 3. But until they break this level, got to kind of assume that we're just moving sideways. The major benefit of knowing what individual patterns produce, for example, our recommendation on Mitek was based upon this scoop type pattern. And you can see what it's been doing over the past few days in spite of what the overall market trend is doing. The reason that we utilize patterns is because human nature works the same way time after time, and the reason we recognize these patterns is because they have worked effectively for hundreds of years. This allows us to be in successful trades even when the overall market is not acting very well. Charts like Tesla have one basic function that allows you to stay long. Notice they have not been able to close below the T-line coming out of wave 2 going into wave 3. This is showing good strength. Whereas charts like Amazon, you can see it's not going anywhere. Now, when you can see that it's not going anywhere, the logic says don't have your money in this trade until you see either breakout to the upside or breakdown to the downside, so you have your next trend movement. Apple provides the same scenario. At this point, you probably don't want to be long or short. There's just no direction. Nvidia, going nowhere. So not only do the candlestick charts tell you when to get in and out of a trade, it tells you when not to be in a trade at all, that you should move your money to someplace better. When you know the results of high probability patterns, we've gone long in TecK for one simple reason. This is a bobble breakout. Notice how they couldn't close below the T-line. You had a T-line crunch. They failed at the 50, pulled back, and when they came up through the 50 the second time, told us where our logical target was going to be, at the next resistance level at the 200. So as you can see, with the market trading relatively lethargically for the last few days, a pattern breakout is going to provide that much more profitable opportunity, knowing what to be looking for. That'll be it. We'll see you in the chat room.